The US predicted a market crash in 2023. In America, predicted the collapse of the markets before the end of 23 years. Analysts are again scared of the collapse of the markets. This week, Chief Investment Officer, Morgan Stanley, Mike Wilson said the S&P 500 could collapse to 3,900 points by the end of the year. This means a 10.3% decline in the current price. Bloomberg writes, "The risks of a major correction are now higher than ever. The US should prepare for a recession. Since the tightening of monetary policy in the world caused by stubbornly high inflation, this always leads to a general global recession. Even though Fed officials stopped the interest rate hike back in June, the US economy is still heating up. Labor market and prices still far exceed Fed's 2% target. Morgan Stanley says the US only has 23% for a soft landing scenario. When can the economy avoid recession? Bank analysts believe that the United States will slide into a recession by the end of 23 years. What's wrong again? Because the markets continue to grow. Despite all the problems, the S&P 500 is up 14%. Statistics pleases with surprisingly strong data on housing construction and the growth of consumer confidence. Does it mean that the economists are wrong? But it's not that simple. Fed rate hike. In the absence of negative processes in the economy and financial markets creates feeling that the worst is over. But it is not. Remember what many investment banks and funds told us in 20 and 21 years? The economy has changed. Lives by different laws. Free movement of capital sets other rules. High stakes are no longer scary. AI will change the world. There will be no inflation. Finally, after that, at 22, the Fed was late with the start of raising rates. The US stock market began a protracted correction against the backdrop of higher than expected inflation. The critical index lost more than 20%. It turns out that the laws of economics had not been cancelled. No matter how it sounds. The point is, for the increase in interest rates to impact the economy and reduce inflation negatively, it takes about 8 to 10 months. According to many economists, the impact will be strongly felt only from the third quarter of 2023. Interesting fact. The Fed conducts an annual stress test of the US financial system since 2008. This year, the test has been conducted among 23 systemically important US banks. According to the test this year, in the worst-case scenario, major US banks will lose $541 billion. Will suffer the most. Deutsche Bank USA, UBS Americas, and Commerzbank, but successfully passed the test. Bank of America, Citigroup, and Wells Fargo, and some of the banks even showed growth under an adverse scenario. Bank of New York, Northern Trust, and State Street Bank. Obviously, America understands well the meaning of the saying, hope for the best and prepare for the worst. And that's all for today. You are on the Market Watchtower News Channel. Subscribe to our channel, enable notifications, and like this video. See you soon.